The global boom in emerging economies will mean higher wages and in turn more consumption of gold. That's what Frank Holmes of U.S. Global Securities told the crowd earlier this morning at the Vancouver Cambridge House show. This is all part of what he calls the love trade in gold.
When people buy gold jewelry at a 10% markup that hour, and they give it for birthdays, for religious holidays, for weddings, etc. And it's very common to give simple gold jewelry. In North America and Europe, it's a 400% markup, and there's no real bid for that jewelry, whether even a big discount. So I think it's a much stronger dynamic market, and it's highly correlated to rising incomes. So we have, in most of the emerging countries, rising incomes of 9% a year. So that's the big part of the love trade.
Last year, big themes, we saw a European sovereign debt crisis, then quantitative easing. Going forward in 2011, do you think these are some of the same themes that will be repeated?
Well, I think those are key factors. How governments deal with the debt restructuring is a real key factor. But there is a pattern of 400 years of data that anytime you've had a contraction like this, there's basically 47 and 400 years. Every decade we get one of them. How long do they take? 16 quarters. A normal recession is 5 quarters. These take 16. So we're halfway through the emotions and the drama of the debt contraction in Europe and the U.S. I'm very bullish on all the commodities. Palladium had a much bigger move, and silver is substantially bigger than gold. There's demand. All of a sudden, China's importing silver, not exporting silver. So basically, people should take a look at countries like China that have government policies for infrastructure building and job creation. Is very, very key as for demand for all these commodities, because the supply is not there.
We will be continuing with our coverage from the Cambridge House show. For Kitco News, I'm Daniela Cambone, Vancouver.